or we have an opening stock from last year.
Yes.
So that's the only two bits where the statements makes the difference.
Yes.
But we can clarify on that once we start looking at the examples.
You say that one more time.
Yes, I'll do that. What I just said is that if we are understanding the difference between the marginal costing and absorption costing, the best way to understand it, if we have sold everything we have produced, no matter what statement we are looking at, which method we are looking at, the answer gonna be same. It only makes a difference in answer when we are looking at either having a closing stock and or having an opening stock.
Because one method, it means having just a variable cost of manufacturing,
yes,
and the other method means incorporating the cost of the fixed and variable costs in relation to manufacturing.
Absolutely, and that's the biggest difference, and that's what we have to understand. So moving forward, it says a manufacturing company produces a single product. During the year ended 31st December 2009, 10,000 units were produced and sold. So whatever they have produced, they have sold. There was no opening stock. The cost of manufacturing during the year, they have given you the cost, and at the very end they says all the 10,000 units were sold at $200 each. And they're expecting you to make an income statement based on marginal costing and absorption costing. Again, if we go through the costs, we said there's direct material, variable cost, direct labor, variable cost, variable manufacturing overheads, again the variable cost, fixed manufacturing overheads, they are fixed and they are related to manufacturing. Variable selling overheads, they are non-manufacturing but variable in nature, and fixed selling and admin overheads, which are fixed in nature but they are again non-manufacturing. Yes. So these two items will be treated as period cost in both statements, whereas these three will be treated as variable cost in both statements. It is only this cost, which is fixed manufacturing overheads, which will be treated as a product cost in marginal, and it will be, yes. So we're talking it other way around. So in marginal, this will be treated as a period cost, whereas in absorption, it's going to be treated as a product cost.
Yes.
So that's what we are looking at. So quickly looking at the statements, I'll just take them. What they have done actually here is they have combined the first three elements. So direct material, direct labor, and direct variable manufacturing overheads, these three are treated as product cost. And on this slide we have combined them together to say this is the total product cost, which is direct material, direct labor, and direct variable manufacturing overheads.
Yes.
Because these three are the combination of product cost under marginal costing.
Under marginal costing.
Yes. So if we produce period cost, it will be like we just said, 1, 2, and 3. So fixed manufacturing overheads, variable selling overheads, and fixed selling and administrative overheads, because these are period cost under marginal costing.
Yes.
We know these two very clearly,
yes,
but because we are talking about marginal costing, any cost which is fixed in manufacturing goes under period cost. So we have totaled these three down here to calculate the total period cost.
Okay. Yes.
Right? And then we have produced the income statement.
So sales.
Sales.
Yes.
Less variable cost of sales.
340,000.
It gives you not profit, but they use a new terminology under marginal costing. They call it as contribution.
Yes.
So sales, take away variable cost of sales, which we have already calculated as a total product cost.
Yes.
We take that out, it gives you contribution.
Yes.
You take out another variable costs.
Yes.
It gives you the contribution margin of taking out all the variable cost.
Yes.
And the final bit, you take out your fixed cost.
Yes.
And it gives you a net profit. But what we have to understand and appreciate here is there's a different method of calculating the same thing. And that is students are more interested in. So if I put the same figures in a different way, I would just say, I'm just taking the figures directly to understand. So we'll say, if we look at sales, it's 200, it's 2 million. If we look at product cost, which is variable cost product, which we have totaled on the top, that was 840. And if I take that out from this, yes, I'll get, be happy with that?
Yes.
If I go back to the previous slide, and it says, this is the total period cost, 737,500. And if I say, take away total period cost,
yes,
which is 737,500, it's going to give me profit. So this term is known as contribution.
Yes.
Once we have calculated contribution, we'll take out the total period cost,
yes,
and it will give us the final figure of the profit, which is 422.
And this is marginal costing.
That's marginal costing.
Marginal costing includes both fixed and variable costs.
Yes, marginal costing takes variable costs, yes, in the product cost,
yes,
whereas they take fixed cost under the period cost. That's the difference. Because next, when we're going to look at the absorption costing, you will only realize the difference is that we have taken something out from here,
yes,
and we have placed it here.
Okay.
And that's it basically.
Yes.
So the answer is still going to be same.
Yes.
So if I just quickly go to the next slide, where it's the same question, what we have looked up, the only difference you will see is that when they have calculated the product cost,
yes,
they have added 4 things to it.
Right.
So 3 things same. So direct material, direct labor, variable manufacturing overheads are same.
Yeah.
The extra bit we have added was a fixed manufacturing overhead, because we said in absorption costing, yes, we take anything related to the manufacturing, yes, comes under your product cost. Yes. Because that's manufacturing.
Yes, even though it's fixed.
Even though if it's fixed.
Yes.
In absorption costing, that's the difference.
Yes.
Because marginal costing, like the other name says, it's a variable costing.
Yes.
It only concentrates on the variable elements.
Yes.
Whereas absorption costing, also known as the full costing, which takes into consideration the variable and the fixed element as well.
In relation to manufacturing.
Absolutely. Just to understand the final bit of it, I would just say that how we tell students to understand this concept, saying that, like we said, we are producing the bridal gowns, right?
Yes.
We know the material,
yes,
we know the labor, yes, and we know the threads and the buttons and all that stuff that goes in.
Yes.
This element is, if I am producing that dress in this room, for this room I am paying the rent, and I'm paying the electricity charges. These 2 are my fixed, but manufacturing, because without that I can't manufacture the dress. Absorption costing says that when you are calculating the cost of the dress,
yes,
you should take some element of rent and some element of electricity in the dress.
yes.
And this is what it means by taking fixed manufacturing overheads as a part of a product cost.
Yes.
Because we are associating it with the product.
So then the only difference really in terms of the absorption and marginal costing,
yes,
is going to be in the part in the income statement,
yes,
which calculates the gross profit.
Yes.
But even then, the gross profit is going to be the same.
Gross profit is, yes, in that way you are saying it's going to be same, but it's same only up to that point,
yes,
where you have sold everything you have produced.
Yes.
If you haven't sold,
yes,
because the sales going to be less than what you have produced,
yes,
when you calculate cost of sales, it's going to make the difference.
Yes.
And that's where the question comes in place.
Okay.
Because if it's a straightforward question and they just give you figures and say calculate income statements,
yes,
you just produce this and that's it.
Yes.
You have dealt with it.
Yes.
But the tricky bit comes in when we're looking at the opening and the closing stock.
So if we're looking at the absorption costing, can we see how that compares directly?
Oh yes, why not? Why not? So moving down here. So what are the couple of differences between them? I'm just going to pinpoint that. It says sales less cost of sales, not the variable cost, because this cost of sales includes your variable cost and the fixed manufacturing as well. And they have totaled it somewhere down up here where they have taken 4 of them together. And that's your cost of sales. Yes, for absorption costing. And in absorption costing, we don't use this term contribution. So this contribution is for marginal costing.
It's going to be gross profit.
Yes, that's going to be gross profit here.
Okay, so the variable overheads then go in your administration.
So these both are your period costs.
Okay. Yes.
And you come to the net profit.
Yes. So
this part is similar to this part.
Yes.
The difference is that we have taken the fixed manufacturing out from here and put them up here.
So the bottom figure down below is your
This
net
one.
profit.
Yes. So it's going to be net profit here. Yes. So we don't find gross profit in there.
Yes.
So we found contribution.
Yes.
And we go directly to the net profit.
So when we're looking at this, really,
yes.
I mean, when we're looking at the administration charges in the administration, in the income statement,
yes.
we can see really it's where, from my perspective, the absorption cost for the variable selling overheads goes into the administration part in terms of calculating the net profit after the gross profit.
Yes.
Whereas the contribution then for marginal costing is seen as a contribution and not the gross profit. Yes,
because out of that contribution there is still the manufacturing element that's missing.
Makes sense.
So that's how we understand the basic concept of the two different types of statements.
Yes.
As long as we have understood the performer and the terminologies that's being used in manufacturing units.
Yes. So when students are answering this question, I presume that you will provide something for the students to calculate.
Absolutely. There will be a practical question.
Yes.
Last time we looked at the case study of Zara, and we have given students a question where they have to produce 25,000 of t-shirts, and that was all budgeted figures, and the CEO have asked the management accounting managers to say should they go ahead with the project of manufacturing these t-shirts or not. And then they asked you produce the income statement under 2 methods, and that's what they have looked at. So it will be a practical question given.
Excellent. Okay, that's fantastic. And is there anything else to add on that?
Yeah, the only thing I would say, these slides are available to you, and if you go down these slides, they will also show you the calculation of if you have an opening stock, how you deal with this. If you have a closing stock, how you deal with that. And that's basically that. It's
that's been absolutely amazing. I really feel I've learned something here in this short period of time. That's been fantastic.
That's absolutely fine. Yeah.
I'd like to say thank you to Shavita for this.
It's my pleasure.
Superb. And I hope everyone has enjoyed it today. And we look forward to seeing you again. And thank you very much. Let me shake your hand.
Thank you. Thank you for having me.